The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, Monday, Wednesday, Friday at 11 o'clock until noon. And today being Wednesday, at Steve Rhodes, great show, 9 o'clock till 10. Terrific show with Tom and Steve together at 10 o'clock till 11. Then I come along 11 o'clock till 12. Hopefully I can match that kind of standard. That's what we want here at TFNN, is to be able to give you as much information about what we're looking at. I certainly do technical analysis. Very little fundamentals here, other than big picture outlooks. And then 12 o'clock until 1 Eastern Time, Larry Pesavento. This is going to be a very interesting show with Larry because I believe he has a whole bunch of cycle dates in action right now. And I want to hear exactly what he's looking at because he is certainly our benchmark for looking at cycle dates and for using many of the techniques that he's discussed here. And then, of course, 3 o'clock till 4 o'clock, you get Dave White, except today. Why? I'll be sitting in for Dave. Dave is unable to make it, and I'll be the host 3 o'clock till 4 o'clock Eastern Time. And that'll be the lead-in show for Tom O'Brien, 4 o'clock till 6, wrapping things up. Of course, Steve Rhodes is off to his Master Trader Series, and that's starting on Friday, I believe. Yep, Friday. So if people are interested, please go to that front page, just check it out. Most opportune time to be looking at cycles. Let's go to the market because this is a very important stage for me right now. The Dow is down 45 at 13,124. The S&P is down 3.5 at 1402. The comp index is barely unched at 3074. Gold is up $4 at $16.51. Silver's up 40 cents at $32.20. Platinum's down 15 at $16.40. And that high-grade copper is up again. It's up 80 cents at 3.83. Crude oil is unch, and bonds are up 26.30 seconds. Now, let me explain what I'm looking at. And let me just be clear. In the ChapmanWave, when you look for the most obvious low bar, and let me go to that right now. In the Dow, what we're looking at, INDU, is we're looking at a low of 12,734 on February the 6th. What happened then was there was virtually a straight-up move, but not only that, it made a cup and ladle breakout pattern in the ChapmanWave. That's where you get this cup formation. Then instead of stopping at that left side high bar to take a breather, to kind of assess where things are going, it breaks right out. And that to me is very important because what happened is you go straight up and then you make this pattern at some point, and it's usually at a peak D that you start to make that ladle. So what we've got now is we've got a peak A that was made. That's the first peak from the low bar on the 16th at 13,289. Let me just type that in, 13,289. And I put it in gray because the implication is in the ChapmanWave we should be going higher. The candle that was formed yesterday, and why I say this is pretty important for me, was what I call, you'll be able to see it. If you're looking at Tiger TV, look at this particular chart pattern. And I'll expand this. This is what my subscribers get every single day. I discuss the Dow in relation to the ChapmanWave methodology, where we are, what we're expecting. And I mentioned that this was a Roman candle. And what is a Roman candle? It's where you open almost if you open, and you might make just a fractional high, but basically what happens immediately afterwards, you go zipping down sharply, and then the bar itself closes and creates a candle that is usually either halfway from the top, or it goes a little bit more. And what is really important about this, my methodology says, and this you will not find in any of Steve Nissen's books, this is my own particular methodology. If you go halfway into that candle, you've got to be careful, because there's a real good chance that not only will you test the low of that candle, but you'll break to at least a nominal low bar. Well, we just did that. Yesterday's low was 13,123.38. And so far, we've gone down to 13,112.93. Not by much, 20 points, but that's enough to say, okay, the very next step in this candle, and that's part of what I'm saying here is why it's important, is that it held the support that I had drawn in this symmetric triangle, a wedge formation on its side. It's held the support. It needs to close above the 9-period exponential moving average, which is at about 13,134. Right now we're at 13,126. And preferably, by day's end, we should close into the upper part of this candle, part of the wick, not the candle. We've already established the candle's high so far. And that was the opening price of 13,170, and then it went a little higher to 13,190. I want to see a close. Now, of course, the market won't be listening to me. Maybe I should speak a little louder. I want to see, with a little bit more demand in my voice, I want to see a close up near the 13,170 to 13,190 level. Now, history would say that markets never listen to any individual, but that's what I would like to see, because that will complete the move. We can start a new rally. That rally says that, and this is, I have no other way of counting this, because we made a lower low than the 12,743 low of the 10th of February by going to 12,734. That negates any chance of the left side low of February being February the 16th, February the 10th being the low, so we could go peak A, B, C and call this a D. So I really don't have anything else but to call it an A. It could be an A minus, it could be a single leg up that fails. Now, this is the reason why I said I was a little concerned. If you look at one of my Dow stocks, one of my pilot-like Dow stocks in my little Dow index, which is only comprises 4 stocks and 2 guest artists, GE, IBM, Triple M, and UTX, and the guest artists are in this. I usually keep them for quite a while. They still Caterpillar and DuPont. The UTX is really my pilot light indicator, and that pilot light says I went to a peak B, and this could very well turn into this rogue wave or right shoulder failure peak E, because the UTX has gone from 87.50 high on the 15th down to 82.41. That's 5 points. That's a big correction. And the weekly chart is in leg D. So and there's very little chance that this week it's going to make a new recovery high to extend this leg D. And everything about it says that the technicals are looking great, but price is the arbiter of trends as far as I'm concerned. And the price is saying, be careful, because if UTX breaks underneath 82, it'll be debilitating for the market, for the Dow, that is. So let's go on to the other indexes, and let's look at SPX.X. And in fact, I'll just run these quickly. I want to take calls at 877-927-6648. The S&P is in leg B with fabulous technicals in the daily. It's in leg C in the weekly. The Dow is in leg C in the weekly. The monthly charts of the, we can't talk about that because the month hasn't finished, but thus far, this is a great move, and I've got E/A, and in fact, I'm going to be very conservative. I'm going to be calling it an E in the monthly chart, same as with the Dow. I'm going to, if other aspects unfold, I'll be able very quickly to turn around and say, you know what, it could very well be a brand new leg A. We could go B, C, D. It's a mega bull market, and it's going much higher. At this particular point, I'm looking at this and saying, there's a chance that by next week, if I'm correct, that there are still new highs to be made in there, new recovery highs to be made in the S&P. Let's see if the IWM is in the same situation. Yep, IWM, the Russell 2000 has made a peak C. Technicals are still very good. The Qs, 1, 2, 3. The Qs are in very strong leg C with a little doji possibly being formed today. Let's just look at Apple. Apple is at 606.84, made a new recovery high today, also in leg C. So the weight of evidence for me, it's leg E up in the 120-minute chart. It could recycle even, but it's leg E up. Most importantly, let's look at that VIX index. So I'm trying to give you a perspective of where I am and what I'm looking at. But even more important is the TLT can barely get out of its own way, up 75 cents at 111.28. If that was to climb to 112.80 to 113.14, the TLT would say, hey, money's going back, you better be careful. So far that's not happening. But the volatility index is really what I've been looking at. And if you go to the weekly chart, you remember I had a left side, right side price time match? And that went to, this week is the week that says if the volatility index doesn't break below last week's low of 13.99, which took out the low of last April, a year ago, of 14.27. And remember, that's what I call the inverse. It's the V-shaped pattern. It's the inverse of the V-shape or the cup pattern. And there's a whole dialogue, a narrative, ChapmanWave. What happens if you break it and close above it? What happens if you don't break it and then you start to move higher? What happens if you break it and close below it? There's a whole scenario. And in this particular instance, we've gone below it. So far, we've closed above the 14.27 low in the volatility index. The monthly chart, and you remember this is something very important, the monthly chart says that this whole area, if you're looking at Tiger TV, that's that blue area, underneath, is that 19 something? Yeah, no, it's underneath 18, and it's above, I've made it above 10.41. So this whole area, we've traded in this area many times, and for a long period. We did it all the way through from July of 2000, even before that, from February of 2004 all the way to the breakout of July of 2007. What does that say? It says that this, over the last period, since we made that major high at 89.53 with the bank crisis back in October of 2006, this last phase, it says every time it's gone to the mid-teens, you've got to be ready, because within 2-3 bars, that's months, you could snap the 20s. I'll talk about that when we get back, but I do want to take calls. Hey, there's nothing much else to do today. 877-927-6648. Give me a call. We'll talk about all these different things when I get back.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital. You would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. And the Dow is down 45. S&P is down. It's very interesting because the Dow, because of UTX, I believe, is down a little bit more in percentage terms than the S&P, which is only down 330, and the comp index is now up 24 cents. And we're going to go to our first caller. We've got Mohammed in Glendale, California. Hi, Mohammed. How are you?
Good morning, Basil. How are you doing?
Very well, thank you.
Thank you for taking my call.
It's my pleasure.
I was wondering if you could take a look at PNY. I'm looking for an entry price on it.
Okay, now this is Piedmont Natural Gas, and I know that at one time I'd done work on it. So let me see if I can get this back real quickly. So there's peak A, peak B, peak B, peak C. I'm just doing the monthly notation. And then does it restart? Yeah, it goes A, B, C. Oh, and then it goes to D. So the monthly chart has got 2 buy modes back from 2009, and it's gone to another peak D. And that, oh, I missed one. That's not good. I did that too quickly. Sorry. So that's a D. This is going to be very interesting. I have an alternate count. So the monthly chart says it is, and stochastic are turning down, but yeah, I'm doing this while I'm talking. Usually I can do it. I don't know what's going on today. My eye must be on other things, but it's not. Okay, there we go. So the monthly chart so far is still technically good, although it looks like the 9-period move support might go this month, but the MACD hasn't crossed negative yet. It is turned down, and the stochastic's still at 80%. That's good. So let's go to the weekly chart. The weekly chart, folks, this is PNY, Peter, Nancy, and Yell. And it's at A, B, C. Okay, that's good. And the weekly chart has made a peak C and is consolidating, and the technicals aren't very good, but the price is holding. Tells me that this is a very key moment for it. Why? Because in the in the way that it's holding, the daily chart is going to be very critical in giving me the information that I need for the weekly chart. So this is now what I'm going to look at. Do you have any position in it at all?
I was just trying to get in. I see it at support 200 days.
I tell you why I ask is because I'm looking at natural gas, 34 round number high, 33.99. I'm looking at natural gas, and I'm getting really close to some kind of a signal that says there could be not just a bounce, but a rally of, I wouldn't even say some significance, but the first pretty decent rally. And I don't know if I'm there yet. Let me just look. I'll just jump to the UNG, but I don't really like that as a vehicle. That's not showing me anything. I'm going to go to the natural gas contract. Now, do you know how directly is it related to natural gas?
No, I don't.
Okay, because that might be important, because it really depends on does it produce it? Is it just a middleman? What is it? What exactly does it do? So I'm going to do this. I'm going to, just because I think it's important. It's called Piedmont, and I've been wanting to look at some of these now. I actually looked at some of the natural gas stocks earlier. So Piedmont, what did I say? Natural gas. Natural gas. Well, give me a second here. I'm going to change that. P and Y. There you go. Okay, that's what I wanted. Natural gas. Okay, and I'm going to say search. I just want to do a quick search. I want to see if I can get in a synopsis. Real-time industrial, commercial, natural gas to more than 1 million residential, commercial, and industrial customers in North Carolina. Okay, so just like you get it, it's a utility basically. So just as you can get an electric supplier is a gas supplier. So that's what I want you to know. Now, this is what I'm going to recommend. And I want you to think of it in terms of, let's see. In terms of your overall portfolio, what would this represent if I said to you, because there's a positive divergence between the stochastic and the price coming down, and the stochastic making a higher high than the low of the 2nd of March, I'm going to make a suggestion, but it's a suggestion just based on the overall portfolio. In other words, I would not make a big deal out of this, but within your portfolio, if you could afford, it's a 31-34. If you could start a small position, I'm already talking about like 30 shares, something, 20 shares, just a small position of whatever you intended to buy right here. I'll explain to you what I'm looking at, because in my chart formation, the 200 period moving average is very important to the chart formation itself. So I'm going to talk about that. If you don't mind holding, I'd like to have a little closer look at this, because it's going to go onto my watch list as well. So Mohammed, hold on. We'll look at PNY as soon as I get back.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best-kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at tfnn.com and sign up today.
Hi folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to tfnn.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatile, To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving Insights free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets term trading opportunities available, including binary options expiring each hour the market is open. Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your financial goals, time horizon, and your risk tolerance, help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. I think today is really Senate hearing volatility day. As soon as these guys disappear, I'm sure the market will try to do better. It just seems to me it's influenced by that. And right now, we're on the line with Mohammed in Glendale, California. We're looking at Piedmont Natural Gas, PNY. So this is what I'm going to recommend. I just did a big study on this. And come to is that if ever it was ready to at least give a bounce, this is the moment. So what I'm going to recommend, it's trading at 31.35, made a low today of 31.01, big deal 34 cents. I'm going to say start a small position here, realizing that this has been in a bear market for a little while, major bull market in the monthly, but shorter term, it's just been certainly since mid-January, it's been coming down. So I'm going to recommend start a small position, but this is how I would handle it. I would keep it as a small position, and it's really a feeler. It's like if you didn't own it, you wouldn't be watching it that closely, but you will own it, and you'll be. So yeah, you are. You're going to start. The 200-period moving average at 31.50 has been fantastic support so far because it's only closed below it once. That was yesterday, and we'll see what happens today. Number one. Number two is if it can bounce the 200-period moving average into a magnet, which means that it's going to keep coming back to the 31.50s. At some point, you want to see it break away and get to 31.90 to 32. The moment it does that, that to me is very positive action. And as it, I would say, add to the small position that you've got. If it can break above 31.60. Add another small position. That's the risky position now. So the add-on is going to be the one that you actually have a fairly tight, I'd say 40 cents maybe. 31.01 was the low of yesterday, but because it's a small, I'd even give it a stop of something like 30.85, something like, give it room in other words, because it's just a small position, a starter position, and this is what I'm looking at. If it starts to turn around it's going to take about a week or two or even 3 before the MACD and the stochastic and the weekly even respond to the positiveness of the turnaround. So unless someone's buying it right now as we speak, so unless the let's just see, I'm going to go right here. Let's see what's happening. Oh, I can't find. Will I find it? It's going to be worth it. I want to just have a look right now. So this is PNY. Let's see how people are responding to listening to TFNN. Someone just bought 100, 200, 300. Very nice. So this is what I'm going to recommend. Start a little position. Let it move higher. You've got your stop in 30.85, 30.75. Give it a little room. Most importantly, that 200-period moving average is going to be the tell, because if it's able to close above 31 for 2 out of 3 sessions, the 31.77 9-period exponential moving average kicks in. Now, the 120-minute chart is really the issue. That 120-minute is not actually as positive looking as the daily candle at this particular point. But we had a little hammer pattern, and hammers often can be reversal signals. Our candle we're looking at in the 120-minute chart continues higher, and by 3 o'clock this afternoon, it's actually able to get to 31.42 right now, 31.51. That will start to improve this candle because it's made a second, what I call a dreaded H pattern. I don't know if you know about those things. And this one will be very successful because it has not closed below, I'll tell you right now, it hasn't closed below 31.23, the low of the 15th in the 120-minute chart at 11.30. So I like what I'm seeing. I'm going to recommend you start a little position. You can then add to that position. But the down move has been so strong since January the 6th in the weekly chart at peak C. It hasn't got to peak C minus, but it needs by month's end or the beginning of April. This has to be tackling the bar of the 9th of March, 32.98. So those are the parameters. And thank you for calling, because I was looking at the gas stocks, and I was looking, this is another one that I'm going to put on my interest group, because I think that natural gas is getting ready for at least a pretty nice bounce. So I hope that helps you, Mohammed.
Thank you so much, Basil, for a great analysis.
Thank you very much for calling. I appreciate it. And that's Mohammed in Glendale. Now, let's look at this, folks. The Dow 29, the S&P's down to $1.10. Within the Dow stocks, I'm going to do a couple of things. GE is just not pulling back. It just, it won't pull back. I wanted an entry point, and I gave it. I wanted an entry point because I wanted a short-term trade to go to the leg B above 20.36. And it won't do that. Of course, I always laugh because during the day you say it won't do that, and then all of a sudden at the end of the day, the market goes down and you get all the stocks you didn't get earlier on. You say, no, this is not what I wanted. I wanted early in the day, not late in the day when the next day can be poor. So the XLF still needs to go to leg C. That to me is very important because the rotational aspect of this market, and that to me is very important. Oh, I don't want to go another step further. Spoke to Ed Young yesterday. Ed Young is recovering from a very serious operation. Has a new heart valve, and he just sends he didn't sound great, but he sounded great in comparison to when I spoke to him 2 days before he went in for the operation. I told him the white light in the den the day of his operation on the 6th, and just enormous well wishes right across the board. And I said to him, and Ed, not only that, everybody kept saying, where's Ed? IBM has hit the 200 that he told us last year it would hit, and absolutely says, well, I'm still holding my IBM. So thank goodness. Ed is on the way to recover. It's going to be a long process, a difficult process. He made his choice, and he went with it, and bravo, Ed. We're rooting for you, and we know you're going to be just doing great in another couple. So, okay, now, back to the market. When I'm looking at certain aspects, if I go to the GE chart, if I go to IBM, another one in my Dow quartet, IBM is holding the 9-period exponential moving average. It's made a peak C in the weekly, leg C, a peak C if it doesn't go above 207.52. But the monthly recycled into new leg C. It's hardly likely a G after all this. It's almost certainly going to be a leg C. That is very positive looking out a couple of months. Now, here's the thing. Because it made, in the daily chart, because it's made this leg D, and then a peak D, MACD's holding, stochastics at 81%, looking good. I need to see IBM participate in this, any move that's coming up now. I want to see IBM. Now listen to this, Triple M is trading now at 89.08. It made a fantastic island reversal. This island reversal from the gap down on the 5th of March, it closed at 87.06. Hey, it gaps down. 85.88 was the high of the 6th of March. Ha ha. That happened to be the low. Why? Because there was a doji candle the next day. For those of you who have taken my Master Trader series, you know how we talk about these dojis, whether they are at the bottom, at the top, one bar before, one bar after. So look what happens. The next day, that doji candle closes at 85.47, and then it gaps up 86.93. 85.98 was the low. So that's what's called an island reversal. And it zooms all the way to leg. I'm calling this leg A. I could call it E. It would fit in the context of what I'm doing. I'm calling it A. And there's a ChapmanWave falling axe pattern. That says if Triple M breaks above, if it gets to 89, 87, 89, 84, 87 in the next day or two, it's going to tackle that high of 90. Round number 90. Woohoo. Round number 90, I didn't even see that. Around number 90, and the moment it goes 1 penny above that, leg B starts, and that should be very positive. And then you've got an extension to what I'm calling leg E in the monthly, and the weekly chart. Monthly chart is in leg B, but underneath the peak F top of 98.19 in July of 2011. So now let's go to the next one. So GE, IBM, Caterpillar. Caterpillar right now. This is like UTX. I'm a little concerned, and that's the reason why I'm expecting that we are going to rally probably into next week, and that's where I'm going to have to put on all. That's where I'll be signals here of consequence. Is something going to happen? Are those restaurant stocks about to give me a sell signal? Let's go to Nick in Melrose. Hi, Nick. How are you?
Fine, thank you, Basil. I'd like to look at Gale, G-A-L-E.
Wow. I'm looking at Gale, and Gale is really good looking. Gale is, in fact, what is it called? It's called Galena Biopharma Inc. Are you in this?
Yes, I got in yesterday, Basil.
Now, what told you to get in yesterday?
Well, I looked at the filters, and I noticed the high volume and the high percentage. And to be honest with you, I jumped in as for a day trade, but when I looked at the chart, I thought it was going to repeat what it's done in the past couple of months. It goes up 3 days and then corrects.
All right. And when you, folks, this is a little hint. When you look at biopharmaceutical stocks, make sure that you always open up the chart so you can see, you can go back historically. Why? Because many of these companies have cycle dates. They have meetings, they get together, and then that's when they make their announcements, and you can actually see the cycle within the cup formation of each spike to the upside. This is what's called a stair-step move. It makes a strong, the low, the little doji low, it's 37 cents, 36 cents. The doji low of the 20th of December in the daily chart of last year goes to peak A at 53. And then it pulls back, goes sideways, and then it suddenly spikes up in 3 bars. It just whoops its way up to 0.80 on the 10th of January. Goes sideways again, keeps going sideways. Then, whoom, 3 bars up to 139 on the 6th of February. Pulls back, another stair-step move, holds the 200-period moving average. I'm going to dot this. See, if you're looking at Tiger TV, you see the dots. Those dots are on the 200 moving average. Now look at this. Goes sideways, breaks 1 penny above 139, high of the 6th of February for leg D. 3 bars, boom, it goes to 171 on the 5th of March. And now let me get my sound effects already. It pulls back from peak D. The MACD just dips slightly negative. the stochastic pulls back to about 40%, and then it goes whoosh all the way to leg E today at 248. I suspect that the pattern of 3 bars could continue. Your most dangerous end of the day today, that's number 1, or intraday tomorrow. Now let's just quickly look at, this is, first of all, let me congratulate you. That was really insightful. You grabbed it, you knew what you wanted, you got in, and now what we're looking at is a 120-minute chart. Nothing wrong at all. It is getting a little bit overbought. I'd like to quickly do a fib extension on it. Give me 1 second here. I need to go down here. So go 1, 2, 3. Yeah, my fib extend 261. I love a 261% rally in anything that's doing extremely well. What happens afterwards is the pullback is very critical. This pullback was critical, but it held beautifully. So now I can go to the next level, and that's there to there. Okay, and it's done another 261. So this says to me it's getting somewhat extended. You thought of this as a day trade, so I'm going to make 2 recommendations. Because it's done even better than you ever anticipated, I would take something off right as we speak, even if it was at $2.46, GALE is the symbol, Galena Pharma, Biopharma, even if it's going to go to 10. You only expected one thing. It gave you much more. You owe it to yourself to at least reward yourself for doing that and having such good analysis to take something off, and that's your profit. Some people say take off your core position, and the rest is just, it's money. It's just free shares. I don't look at it that way. I see this as having at least another pop tomorrow. Whatever it is, it's news related. That's what happens with these biopharmas. At $2.47, it hasn't had any great breakthrough, I don't think. This is news related, which later in the 3rd stage or whatever it is could be something fantastic. So I'm going to recommend take a little bit off, and here's what I'm watching. It's at $2.47, and the high today is $2.48. If for any reason it can get to 257 to 260, that's where I would take a little bit more off, and then I would hold the rest. And the rest, I would say, you know what? I want to stop on that. Or you can hold the rest and say, you know what? Leg D in the weekly, I'm going to hold it for another 2-3 days and let it tell me what's going on. But that's my scenario that I'm looking at. The monthly is very good, and the weekly is still very good. So looking out, you might be able to hold on to some. Hey, congratulations, Nick. That's fantastic.
Thank you, Basil. That's exactly what I was thinking, but I wanted you to confirm it.
I do. Thank you very much for calling out. Congratulations. Great trade.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand mine. Is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York Stock Exchanges under the symbol GBG.
He uses pattern recognition, Gartley's, CBCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, everyone. Basil Chapman. In the remaining few minutes, this is what I want to do. I will be back at 3 o'clock this afternoon, 3 to 4, and I'll give a different kind of a wrap-up because the market will be nearing the close, so we'll have an even better idea. But in the meantime, what I'm looking at here, I can't keep from staring at G-A-L-E. Gail is doing beautifully. Oh, and our friend Gail just had a birthday yesterday. Isn't that nice? So what I'm looking at here is, first of all, the gaps, those huge gaps that so many stocks have had over the past 3 weeks to 4 weeks. When we start to get a very serious pullback, those gaps are likely the last of the major gaps, the news-related gaps. Those are the gaps that I'll be looking at. And that says that the market really could take time and price at that stage. Looking next week, I could be wrong, could have started today, but I'm thinking next week, Wednesday, Thursday, somewhere like that. Will it be at that particular time that I do get a sell signal, and that sell signal has to quickly get updated to intermediate term? Not if the Dow is able to break into the 13,380 to 13,400s. Can you believe I'm even talking about 13,400s? This is unbelievable. But most importantly, look at the TLT. The TLT, on any one of the days that the market has started to pull back, has just failed to respond. Today it is responding. And after a doji, I say a doji on the second bar. That's important. Now, what's even more important is that if the TLT and the dollar and the volatility index, remember our 3 bears, dollar, bonds, and VIX, that's Dolly, Bondi, and VIXI. If those 3 bears wake up and they really start to climb higher, that money says, we're coming out of stocks. So I'm going to be watching that. I'm going to be watching to see how the dollar does. Can the dollar get into that ugly candle, deeply into the candle of the 16th? Can it get, it's at 79.79. Can it get above 80.42? Is the euro, there was a terrific rally, but it only lasted through early this morning in leg B. a good sign. That euro, the stochastic's only at 45%. The MACD's turning down. USD JPY was close to giving me a signal. There you are. That's in leg. Did that go above 84,173, 84? No, it hasn't done that. When the dollar Japanese yen breaks above 84,173, I'll be looking at that and saying, okay, very strong leg B in the weekly. Are you about to pull back? What's the implications there? Let's now just look at the numbers before we go off the air and Larry comes on. And I'm really looking forward to Larry's show today, as always. The 200 period move, the 9-period moving average in the Dow, which is at about, it's been covered, it's called 13,133. I want to see the Dow close nicely above that. I want to see that it treats with respect done for so long, number one. Number two, because of the Roman candle yesterday, if we close by the end of the day, if the Dow closes under 13,123, together with UTX, and what was the other one I was looking at? Was it Caterpillar? Caterpillar? Yeah, and Caterpillar, I've got to say, wow, maybe we start heading down earlier. I just don't think so. But then there are fantastic stocks. One that I missed, which I wanted. I spoke about it, but didn't get. Even today I was going to get it. I said, it's in leg D, and it's done very well. How much more can it go? ALXN, Pharmaceuticals, BAP, right through the resistance in the weekly chart. You see the strong stocks now are still garnering money. And that, to me, is absolutely important to note. The home builders are still doing well. So let's watch Dow. Dow needs to break into the 13,170s by the end of the day. That, to me, would be very positive action. So I'll be back at 3 o'clock. Stay tuned for Larry. And thanks for being on my services, the opening call.
Looking